Hello and welcome to Trading 5 Talents. In today's video, we're looking at the fourth week of the OptionSellerROI.com website and their recommendations for cash secured puts as well as covered calls. So this past week, the week of 4/18, there was only one put that made it through all of my filters, which you could see down here. And that was Mara. So Mara at the 19 strike price. So it opened the week at 2042. It closed last week at 2123. So obviously there was some downward movement over the weekend, but still it opens at 2042 and you're going to sell a cash secured put at $19, meaning you need $1,900 in collateral in order to put on this trade. So when you sell this cash secured put, you're receiving $50 in premium or 50 cents per share, 100 shares per contract. And you can see the overall price action. We'll just take a look at the spark line down here. It goes up in the middle of the week and then it just, like everything else, pretty much in the stock market, went down towards the end of the week. And you can see the options premium, it started to go down with theta decay as the option price moved up. But then as the stock price moved up and as the stock price moved back down, the option price moved back up, which meant that it closed at $18.15 on Friday, which was below the $19 strike price that we sold that put at, meaning we did not win this trade and that we had to actually purchase the shares at $19. So again, when you sell cash secured puts, you put up your collateral to buy 100 shares at that strike price. And if the stock closes below that strike price by expiration, then you will use that collateral and purchase 100 shares at that strike price. So we were assigned, if you made this trade, you were assigned this trade, and we calculated that it wasn't a winner just because that's, I guess, the definition of a winner and loser for cash secured puts. Final ROI is 2.6%, which is the 50-cent premium divided by the collateral that you're using to put on this trade. So I have a note up here that mentions the call for next week. So remember the wheel strategy. In many cases, you sell a cash secured put and you keep on doing that until you're assigned. In this case, we are assigned the first week. And now once you're assigned, you have these shares. Beginning Monday morning, you can now sell a covered call against these shares that you own. Next week, you could see April 29th expiration. The $19 call price is 84 cents. And this was at the close of Friday. So it's going to go down over the weekend. But still, it's pretty good premium for selling a covered call if you were to be assigned this put. So sometimes it's helpful to look ahead for the next week to see if the call premiums are nice before even selling that put, just to make sure that if you are stuck with owning these shares, then you can still make money on the other side of the wheel strategy. All right, so that's it for the puts. Let's look for the calls. So there are 10 calls that I chose based on the criteria that are listed down here. And again, you can see a previous video for all of the run-throughs of the criteria. The link to this website, OptionSellerROI.com, is in the description, and it's a free site, as well as the spreadsheet that I'm using here. If you want to use it, there's a link down below. After you click on the link, click on File, then make a copy, and then it's saved in your Google Drive. All right, Riot, Mara, Twitter, BlackBerry, AMC, and so on. You could see all of these suggested strike prices for the calls, and then what they actually opened at on Monday morning. So again, when you sell a covered call, you purchase the shares, and I'm assuming that you're purchasing at this price Monday morning at open, and then you're immediately selling this covered call. So you could see here you buy at $14.61 and sell out of the money covered call at $15 out of the money. Here, this is at the money. You're buying shares for $45.51 on Twitter, but then you're selling the $14.50 covered call. 1720. So all of these, it looks like, are out of the money calls that you are selling, which again, that's typical. I think that's what most people do when they sell covered calls. But there also is a strategy for selling in the money covered calls. So it's also a pretty profitable strategy if you want to take a look into that. All right, so let's look at how each of these covered calls did. Now, remember, the thesis that you have when you're selling covered calls is you want the stock price to go down. You want to be able to keep your shares, you want the stock price to go down, and you want your covered call to expire worthless. So we're selling at these premiums here, these option premiums, and we ideally want those premiums to go down and expire worthless. we keep our shares, and then we keep the premium, and then we can repeat the process the following week. So how did this turn out for this week? Let's hide these just so we can see we'll keep Friday open. So here's open, and here's close on Friday, and then we can see the summary spark lines. And then we can see if these were assigned. So out of all 10 of these covered call plays, 2 of them were assigned, the other 8 were not assigned, meaning that those options expired worthless. And those are all of these here in green. They expired worthless. You keep your shares, you keep your premium, and you can see the final ROI based on those premiums. So here is I guess the disadvantage or the risk when selling covered calls. All right, if we just looked at this first one, Riot, you purchased the shares at $14.61 and you sold a covered call at $15. So you gained $55 for making that trade. And the stock price actually closed at $11.85. Now, you purchased them at $14.61 and now they're worth $11.85. So if we look at the calculator, $14.61 minus $11.85, you can see that $2.76 per share. So right now you have an unrealized loss. If you made this trade, you have an unrealized loss of $276, but you added that 55 cents in premium. And so, well, actually you subtract it, sorry. You have an unrealized loss of $2.21 if you add in that premium, to sort of lower that break-even price. So you have an unrealized loss of $2.21. But again, that's the risk that's associated with selling covered calls. You're buying shares and then they go down, just like if you bought shares and they went down without doing anything. At least by selling a covered call, at least you're making some of that money back. So the final ROI was 3.8%. Let's look at the 2 winners. Before I go on, if this is your first time, the blue ones are the trades that I have a similar position in. It's not this exact position, so my entry and exit prices aren't the same here, but they are similar. So let's look at the 2 winners. So Twitter opened at $45.51. I'm assuming you purchased at that price and then you sold the $45.50 call. So if that gets assigned, which it did, you would lose this 1 cent, $45.51 minus $45.50. So you'd lose that 1 cent, but you gained $2.21. So really you had a $2.20 profit on this trade. But you could see Twitter, because of all the news that went on this week, it actually rose to $48.96. So what happens if you just would have purchased the shares, held on to them at the end of the week, and then sold them off? So what do we have? $48.96 minus the $45.51 that we would have purchased them at. You can see we would have had a $345 gain. But instead, because we sold the covered calls, we only got $220 here because we're subtracting that penny because we sold this in the money, slightly in the money covered call. So $220 versus $345 in profit. Again, that's another disadvantage of a covered call that some people don't like. It limits your profits. But again, you don't know that the stock is going to go up this high. So you would not have known you would have had that max profit of $340 some dollars. So selling a covered call, at least you are almost guaranteed that profit if you hold until expiration. Right? So this one right here, BlackBerry, you purchased at $17.20 and you sold the $17.50 covered call and it closed at $17.57. So you were assigned, your shares got called away. So what happened here? You gained the 79 cents in premium for selling the call and you gained this 30 cents because you bought at $17.20, sold at $17.50. You gained this 30 cents. So 30 plus this 79. So that would be $1.09 per share or $109 in premium. So we can look at that ROI, 109, well, 1.09, divided by the 1720. So we can see our ROI would actually be 6.3%. So it shows it right here as 4.6% because it's only calculating the premium. It's not calculating the capital gain that would have been made if assigned. So really, you got a lot higher ROI if you made this play. Now, what happens again if you just would have purchased the shares and sold them on Friday? You would have purchased them at $17.20, sold them at $17.57. So you would have gained $37 in just stock appreciation. But by selling this covered call out of the money and being assigned, you gained $1.09, so $109. So in this case, it would have been much better to sell the covered call. In the Twitter case, it would have been better to just buy and hold the shares. But again, you don't know that the stock is going to go up, so selling a covered call to me makes a lot of sense. So this was the fourth week in taking a look at each of these suggested plays for the wheel strategy using Option Seller ROI screener. And next week will be my fifth and final week, and I will give my final verdict as to whether or not this screener is worth it. And I also do want to mention that I did not enter any trades in using this service this week. So there's nothing in gold or yellow here. And the reason is because I was already assigned on 2 of the NKLA trades of the previous 2 weeks. So my money is already tied up in those trades, and I'm selling covered calls on that ticker, and I am gaining profit each week by selling covered calls. But because my money is tied up, I wasn't able to actually open one of these trades here. So if you want to keep up to date with this review and know when my final verdict is coming out next week, then go ahead and click on the subscribe button and turn on the notification so you can catch that. In the meantime, trade wisely and take care.